Welcome back to my channel Quest for Knowledge. Today we will be going through with economics first chapter, which is Introduction to Microeconomics. So let's understand what is the meaning of microeconomics. Economics is the study of how people and society make choice about what to produce, how to produce, and for whom to produce goods and services. It is basically about understanding how we manage limited resources to meet our needs and wants. Simple economy is like a small town where people trade things they need with each other. They exchange it because every individual in the economy cannot produce everything what he wants. So here we have resources limited and wants are unlimited. So with whatever the resources are available to us, and in that we are going to produce an output, and that we are going to exchange it in the society in order to meet our other needs. So in a simple economy, people have jobs to make money. They spend money to buy what they need. Sometimes they save money for later. Everyone in the town helps each other by trading. It's a small, friendly circle of trade and work without too much complicated rules or big businesses. So, simple economy is like this. So, one goods being exchanged with the other. But as the days passes with the introduction of money, everything, the economy is more complicated. It's no more simple. Okay, so what are the basics of economy in simple term? An economy is like a big system where people and business trade things like money, goods, okay, and even services. What you do, that work is service, and what we purchase is goods. And simple economy is on the basis of supply and demand. Supply and demand is like a seesaw. When demand is more, prices are sure to rise, and when demand is slow, then prices are obviously to go down. And money is like a tool to exchange, so value has to get exchanged with a value, so it is a common medium of exchange. Jobs and work, people work in order to make money, and they might have jobs where they help to make products or provide service. They earn money for their time and skill. And government plays a major role to keep things fair and safe. They make rules, provide services like schools. Sometimes they collect tax, and so that they can spend all these on infrastructure, etc. Saving and spending, people save and spend for future. They spend money to get the things they want. They save it for future to meet their rainy days and uncertainties, or for their retirement, etc. And trade with other countries comes as a macroeconomics, a bigger scale, when you deal with transactions of goods and services in an international level. That all will come under simple economy. So these are the major problems of an economy. So what are the central problems of an economy? The major problems of an economy is what to produce, in what quantities. It discusses about the problem of choice, how to produce, and I discuss about the problem of technology. Whom to produce, discuss about the problem of distribution. So let's understand them in detail. What to produce, this question is about deciding what goods and services to produce with the available resources, and it needs a lot of decision making because the items which we use are highly demanded. So we have to make decisions what to produce. How to produce relates to the methods and technology we have to adapt for the production of goods and services. It involves choices again, like whether we should go for cost effective, or whether we should have to be more technology oriented, or whether we have to be labor intensive or capital intensive. That all come under how to produce. For whom to produce, this question addresses regarding the distribution of goods and services among the member of the society, and again it involves a decision to who will consume the products which we produce. And it is all completely based on the income factor of the consumer, the taste and preference of the consumer, and many more things to consider. So let's discuss now about the types of economy. Types of economy: there are capitalistic economy, socialistic economy, and mixed economy. First, we'll understand market economy, which is also called as capitalistic economy. There, we'll have private ownership. People and business own, okay? They own stuffs. Demand and supply is like prices, what they have, they keep, they fix. And this is all decided by the private people only. And the competitions are very heavy, so that what happens, the things become cheaper because they have competition with one another. And the government role is very limited, very minimum role the government plays. One of the example of this country is USA, Singapore, Japan, etc. Now let's discuss about the centrally planned economy. First, major intervention of government's role. The government plays a major decision making role, and all the decision regarding what to produce, how to produce, everything is being made by the government, and there is no private ownership at all. So there is no competition, and everything government only controls. And it is stable but less sufficient because uh, they might not be very good at making decisions sometimes. So the example for this centrally planned economy is North Korea, Vietnam, and China. Okay, now let's understand about the mixed economy. Mixed economy is the mixture of public sector and private sector. And here we have the mixture of both capitalistic and socialistic economy. And India is one of the best example of mixed economy. And here we have mix of control where government and private control both runs the economy, so that there is a balance between rules and freedom. Now let's understand what is production possibility frontier. As economy, in economy, the thing is that resources are scarce and wants are unlimited, so that we have to make proper choice for the efficient usage of resources. So the production possibilities frontier is that whatever the possibility of production is there with the available resources has to be done. And in order to produce one thing to the maximum, we have to reduce the other thing, minimize the other thing. So that is called as production possibility frontier. PPF shows what a country can make with its available resources, like workers, machines, materials. It's like a limit on what they can produce. So trade-off means in order to produce something, they have to take decisions, and they have to produce something less. Example, if a company want to produce more cars, then they have to produce computers less, because resources are scarce and wants are unlimited. Efficiency on the PPF are efficient because they use all the resources wisely, and everything they properly utilize, and that is why good efficiency in PPF. And choices, like PPF helps to make choice, like which one is more demand, that much they will choose, and the other they will minimize it. So likewise, in order to maximize one thing, in order to produce one thing in a maximum manner, they have to produce the other thing a bit less. So this one is the thing. So example, so as you can see, if they want to produce the coffee more, then they can't able to produce the sugar. If they want to produce sugar more, then they have to produce the coffee less. So this is called as production possibility frontier. In 100%, if they want to produce 80% of the cotton, then 20% of the sugar. So vice versa it goes. So this is production possibility frontier. Okay, then now let's move on to the next. So lastly, what is opportunity cost? Opportunity cost, we have a punch dialogue for this, that the next best alternative forgone. It means when you make a choice, you have to sacrifice the other. Example, if you have 10 rupee, in that if you want to purchase a ticket, movie ticket, or else you would want to play a game, then and you chose to buy a movie ticket, then you sacrificed a video game. So it means opportunity cost is like when you make choices, you have to miss out something. So this one is a very good example. If you choose to study instead of wasting time, then you will surely get good benefits, like your ranks, you will get good ranks. Or if you choose to just time pass, then surely you might have to face some loss. Your marks might not be good. So this is opportunity cost. It is all on your choice. It is your choice whether you want to study, or to make good, or to bring good result, or to waste your time, or to down your progress. So this is all about. Now we'll understand what are the major economic activities. Major economic activities are consumption. First is production, distribution, consumption, and exchange. So people buy things, that is consumption, for their own usage, so that is consumption. So that as there is demand, so there is a supply, so supply is done through production. Exchange, a value has to be paid in order to consume, so that is exchange. And distribution, so the income which is earned is distributed in the manner of rent, land's rent, labor wages, and capital interest, and organization profit. So let's understand what is economic activity and what is non-economic activity. Activity which produce goods and services and generate income is economic activity. Example, a teacher teaching in school and getting a salary is an economic activity. A teacher who is teaching for free, to which it does not generate income, so it is not an economic activity. That is why we don't consider housewives, homemakers, as they do not generate income, so that does not come under economic activity. Okay, so yeah, so that is it. I hope this video helps, and if you found this video helpful, do like, share, and subscribe. I really need your support. The more like and share you do, the more it will give me encouragement to make more videos, and many much more. Thank you